Okay, another Prospero AI stock market live stream live on Twitter, X, and YouTube. And we'll allow some people to come in here, and then we'll begin with our topics right away. We opened up great in the model portfolio based on the signals all from within Prospero. We're going to let George detail that in the coming moments. And we'll just start off with a little market update, like we always do, to get everybody updated on what we're seeing within Prospero and what's happening in the markets.
We are not talking about the model portfolio, Stephen. We are talking about the newsletter picks. You should like the investing letter picks. You should know the difference by now. But yeah, I just checked. So our three, so we had some sector type shorts, right? And I just checked on them. And leg, which is our one of our consumer cyclical, is down 9% today. Then we added med, which is down almost 7%, and then we added SPWR, uh, which we targeted because of solar difficulties and EPS challenges, and that's down almost 6. Um, and so, yeah, I mean, not only that, but we have things on the other side. Like Tidewater is like a stock, one of the only stocks up today. Um, so we are hitting, I mean, it's been a stellar start to the year for us. Like, knock on wood. And I don't know if that's real. Like maybe we need to go over here. Um, but yeah, we're hitting at an 82% rate to start the year. That's obviously going to continue this week. I kind of want to update the picks to do it like to look like a little after just to see where we're at because we might be it's a very, very strong start. And like, I'd say a very big difference between, when you're doing this kind of like professionally versus otherwise. I would say that, a big thing is like the start of the year and like, your performance starts tracking again at the start of the year. And like, just as like a lesson for you and kind of how this kind of stuff can go for me, like, no matter how well I do year in, year out, it's still like stressful for me to start a new year. And like, there were times as I was, especially when I was a professional, where like, I had a lot of the same problems that everybody experiences where I'm looking at, maybe I make a couple bad picks at the year. And like I'm hearing voices in my head that are telling me, well, do I take more risks to make it up? Do I maybe be even more conservative than normal to make sure like these losses don't snowball? Um, but yeah, obviously I think, the biggest lesson and the one that I kind of teach over and over again is when you have things like that, nervousness, anything like that, not only is it important to lean on the lessons that you know. I actually have my younger sister is newer to fantasy football, and I've been playing for many, many years. And my general advice to her, like whatever she says, like, should I start this player? Like, there's one rule that I always go by year in, year out, and that's like go with your horses. You don't bench players that have done well for you over the year, no matter how good the matchups or anything like that. And I make that analogy because I would say my best advice with stocks is very, very similar, which is that, the horses are your go to rules, the ones that like you've seen repeatedly, make money time after time. When we talk about process, you might not have anything, but that's why we talk about process. Because when you have things that work for you that are repeatable, we also can't stress enough that you can't just keep pursuing the same strategy over and over again with no wrinkles and expect success. But I think that's also the difference between a good process and like a good stock pick, right? I think it's a difference between making a lot of money on Nvidia, um, because like you and everybody else saw like the demand for chips and even AI rise, um, and something that you've like a slight twist, which is just like how do I locate the next big growth sector, right, or the next big growth company? Like, was there a process that you used to find Nvidia and maybe one or two other companies that you can repeat? Like that's more of what I'm talking about. And I think Prospero is a really good like just so everybody knows if we're talking about like the psychology of how these signals were built, you know, a lot of what we do is to kind of embed that and how we talk about this. Like we like these kind of net options setups, and that was one of the things I'd be interested to see. There was a company Esca that I didn't pick that was in consumer cyclical. Wow, that's up 1.66% today. So that was even higher on our screener. But another reason I rejected that was basically like because we saw net option sentiment trending up and I didn't like that trend. So that's a really good example of even just like layers on top of layers where like I saw a screener where ESCO was actually above these other two consumer cyclical stocks that are doing like really well, or consumer discretionary stocks that are doing well for us as bear shorts picks today. And like it was kind of a rule on top of a rule where I was looking at just like a higher net option sentiment raw number that was in the high 30s versus med that was at 24 and leg that was at 19, and I was just more comfortable in that zone, especially if I was doubling up on consumer discretionary stocks, and it paid off. So I think there's like little things like that that are very very important in terms of like repeatable process. And I think leaning on process, to be perfectly frank, like despite the last 2 years of good results, we're trying to close around. There was a lot of pressure on me to uh to do well. But instead of feeling that pressure, what I did is take this exact advice. I did a review of what's really been working, and especially recent history, like leaning on the sectors more. That's something that I think I did very well this week that I didn't necessarily do in all of 2023, and I more adapted. Like this really weighing more heavily like the sector information on top of like traditionally what I saw. So I think that those are like some really good like we like to teach the philosophy but also the specific. I'd say the more that you're kind of like looking at and familiarizing yourself with like what we're looking at on the sector level in these letters now, and what we're kind of seeing and combining with net option sentiment, because we said, not only do we kind of see some sector things that are scary for us, we kind of pointed out, and I could show you in the letter a little later when we switch to we're doing the model portfolio again, what I was seeing on the graph, especially QQQ net option sentiment that had me concerned. Um, and I think that's a good segue to market. I don't know if you have any follow-ups there, Stephen, or we should segue to market.
Yeah, I think we could segue into the market update. Yeah, before we go into the rest of the stuff.
So yeah, basically, and I was going to segue what I was seeing in both SPY and QQQ, and especially QQQ. I actually saw the last 3 weeks QQQ net option sentiment kind of very clearly leaning the market down, and this would probably be good. I'll share my screen. Sometimes I don't like to share it during this, but I think this is like kind of way too important not to share. Um, So we're talking about this graph, right? And basically, you see here the net option sentiment leading price down really, really clearly. But it's not always going to be that clear. But I made a lot of money on January 8th, right? By flipping my portfolio. And it's basically like what you're seeing is this. Despite price not moving up tremendously, I started seeing these spikes in QQQ net option sentiment that made me think we were going to see some bull movement. Then I kind of saw the flip side this week. Here you see a lot of QQQ net option sentiment above the price line. Here you start seeing reverse behavior. You start seeing, especially to end the week, very consistently below on like the same scale. And like the scaling is pretty important. But yes, like that is why we were kind of like bearish concerned. But like, we reviewed like very clearly in our letter that there was like, when we laid it out, like we think there's a very clear bull case right now and a very clear bear case. So that's kind of like why we look at it in both ways and why we're six longs, five shorts. And just an example of like, I would say both how much it's important to have a macro view, but like why I always emphasize like have a macro view. Any view should be willing to revise because of what I did with IWM. I mean, I kept saying like I expect IWM to maybe hold it for a year, but like I started to just see behavior and it's down 1.11 today, and I think like the SPY is down, yeah, 0.28. So that was a good drop. Um, where I was just basically like, okay, like I thought I was seeing a lot of stuff um that would lead me to believe that uh that we were gonna see good like mid cap movement and growth stock movement, which is obviously mid cap. And I saw that really fizzle. And I was very quick to be like, yeah, I did expect that to hold of the year. We did hold since November. So it wasn't an insignificant amount of time. But like, I'd say that's the balance between, I think, and I'm increasingly, I'm having a lot of meetings with users of Prospero. And we do have some good rollouts in terms of like how to use. And like, and I actually say, like, if you don't subscribe to the trading letter because you're not a trader, like I would say, I'm now doing updates there every day. And I think a really good example of how to use it is just like saying like, oh, like what is my market view now? Like, what is Prospero's? Do I have one? And just kind of like prodding yourself on that. Because, like, to my point, it took me a while of looking at day to day numbers before I decided that I didn't like the IWM trade as much. And I expected to like it for a really long time. Um, so I think that's just like a really important thing to always keep in mind as you look at this. Like, the best thing, even beyond like, yeah, I'd say in the last 6 months, especially, I've nailed a lot of market turns and I'm getting better and better at using the numbers, like using the same numbers you see to tell me if that's going to happen and the same numbers I talk about. But I would say beyond that, like it is just like, I'd say it's very important to start like seeing how I use it, but like kind of gauging your own opinion on that. Because even if you're an investor, if you're reading this every day and you just do a better job of having a market view and having an evolving market view that you can kind of see in mine, see the kind of data I'm using, that kind of thing is invaluable to start to feel like, as you do start to think about like, as I say, an SQQQ hedge, if you're fully long. Or one of the things I had a meeting with a user last week where I was just like, I'm happy to start helping you go through just like one tactical short. And I use Cracker Barrel, and that's actually been down a lot since we talked about it. But I'm just like, if I could just help you figure out one tactical short, like that you have on it every time, where you just get like um, more and more familiar with like what to do with that and like your comfort zone. That's really important because like what a lot of people don't know about shorts is that it's actually a loan, right? And we looked up Cracker Barrel's loan rate and it was like 0.41%. So like when you short a company like Cracker Barrel, like that has been down since, that has like doesn't have like a huge demand to short, right? That's the low borrow rate. You're actually borrowing capital at a price way below than you could borrow it, especially at these high interest rates. So it becomes like when you start like getting in tactical shorts, and I always say what's in your comfort zone. So you could have like 20 longs that make up like 90% of the value of your portfolio, and then start to like experiment with 5%. Just like get a comfort zone, which how you integrate shorts. Because the bottom line is like when you short a stock and you like, let's say like just for ease, like 5% of your portfolio, you actually then have kind of like 105% of your dollars, because that's a loan to spend on, longs that you really like. Or even just like broad market hedges, like even like just, down like the SPY down. Um, but I think that's really important. And it's a good way to look at, like, I would say the most important thing as an investor or trader or whatever, which is to have a growth mindset and to say, like, okay, this is my comfort zone. What's next for me? And slowly explore like small levels up instead of large levels up. And I think that, like, yeah, to my point, like, whether you just get the investing like letter free, the paid investing letter, or even as you start to get into more advanced stuff like the trading letter, which I like at the price we sell it at, like even if you don't trade, it's a great way to just get this market information every day. And as we've said, anyone that watches our streams, feel free to email me, and I'm even happy to work out a deal on both of our products, a package deal on both of them. And especially, I'm happy to give discounts to people that I think are on a learning journey that I can help go on that learning journey and support. Um, but yeah, I'll paste my email right here. I think most of you know it. You can always feel free to email me, even if you don't want the paid products, just to ask me how to use Prospero better. And we are going to go over later uh, how I use the app, best practices. I'm going to kind of announce it, and then there's going to be a video that we upload. But yeah, I think that that's just like very, very important to start figuring out what you think is going on in the market, because it's not necessarily like, oh, do I think you're going to start buying QQQ puts tomorrow, or even like hedging SQQQ well tomorrow? No, but it puts you on a journey where you start thinking about it and you start like seeing how other people do it. Me, ask questions, research, make you curious. And at the very least, it doesn't mean like I'm saying you're putting on these hedges, but it does mean like, oh, maybe you get better at doing exactly what Warren Buffett does, which is moving to cash, moving 50% of your portfolio to cash as you just get more nervous and more sure that you think the market is going to take a dip. And like little things like that are just like how you go from like a decent to good to great to excellent investor. And that's like a long journey. But like I'm assuming if you're spending any more than, if you watch this live stream if you're spending anything more than like 15 minutes a day on the market, you should be making moves to be on that growth journey and not just staying fully in your comfort zone, which is a slight tweak. I know I advocate being in your comfort zone and that's important. But like taking small, like there's this thing called like the Google 20% rule, where they basically say 20%, like, well, we talked about this. Not only are 20% of their tests, like 20% of your Google searches are actually test algorithms they're running to improve. And that's a really good example of the growth mindset. But actually at Google, you're supposed to spend 20% of your time, like not on your main project, on your like passion projects. And I think that's a really important thing in terms of growth mindset. Like, yeah, stay in your comfort zone, but like whether it's paper trading, whether it's just like one short that is a small part of your portfolio, starting to push your comfort zone, I think is very important. Do it with a small amount of money. I always recommend, actually using real money because I don't think paper trading um, is a very good, like the best lessons you learn by losing like a little money, not a lot of money. Like you do really learn like great lessons by losing a lot of money, but it's not lessons that I would wish on any of you. I would aspire to go a little out of your comfort zone with a little money and learn lessons that way.
Yeah, it seems like it takes people learning a lesson the hard way to actually learn it. But I want to go into your investing letter a little bit more because you brought it up and dive into one of the bearish signals that you put in it. If you could explain it in further detail, because we've talked about like insider trading before and how it's important, but you shared an image of a chart that showed insider transactions ratio, and I had never seen it before, and I was curious if you could just explain it a little bit more.
Ah, I think you've misunderstood what insiders are. Insiders are company execs, right? And like insider trading is very different than insider transactions, right? Insider transactions are often planned, they are especially like, the biggest BS, and we talk about this all the time. Like if you were a C level, like if you're a CEO at a I would say anything larger than let's just say $20 million market cap, because that just like takes out all the wiggle room. You don't need to sell your shares to get liquidity or cash. Like really the only reason you're selling your shares um, is because you think the stock price is going to go down. And or like you're just not sure and you want to like bank it just in case because you're very invested in the company. Um, but like as you start to get down to like VP level, I would say like yes, it might be for tax purposes, and I did share it. But like the interesting thing, and I'm sure the same thing you're wondering, Stephen, is like you could say that some of it is tax purposes, but if you look at last January, it's slightly elevated versus the rest of the graph. But this is extremely elevated behavior. So I would say like this actually means one of two things. It honestly either means that um that uh there were some planned sales because you have to basically like months and months in advance you have to say you're going to sell these shares. You have to like give the market notice, so it's not like a event, like it doesn't turn into like a stock needs to get halted event because it like snowballs because the execs are all being like, oh, you sold, I'm going to sell too. At least the market has notice to the sale event. And I would also say, so it could just be that people were actually expecting um the this year to be tougher than it is. So that's why it's tough to read. It just makes me cautious. But like that's where it gets interesting in my comment in the newsletter, where it's like, okay, people were expecting this year to be hard, right? They could have expected this year to be hard because of like macro concerns, right? Or they could expect to be this year to be hard because they're seeing concerning things in their business, right? And the reality is it could be either or both. Probably like I'd say with anything in the market, it is almost always like little bits of all the reasons that make sense to you and probably more of like more weighted towards the reasons that make more sense, right? So I would say there's a lot of like there could be a variety of other reasons, but I would say the reason we're seeing that like very elevated insider sales and like highly bearish levels, I would say this January. And like just to put the real numbers to it, like in December it was about at a 25 percent ratio buys to sells, right? This is now 145, which basically means there were 20% sells to buys before in December, and now there are like 145% like sales to buys. So we're now talking about like basically like a 50% above sells to buys. So that is pretty like it's hard like I said, a big part of this could be not a big deal or I would say a chunk of it could be not a big deal just because like when these insiders planned, they thought rates were going to be tougher, they thought inflation was going to be tougher, blah blah blah, all that stuff. But they could also have been seeing signs of trouble in their business. And I probably do think they've been seeing signs of trouble in your business. Because the bottom line is if you think your business is strong overall, like you don't sell just out of macro concerns. Because like if you think your revenues, your earnings are going to grow, um, then actually if there's a tough market, you will actually do that much better by holding your stock that you expect to do well than anything else. Um, just a quick said that's insider transactions, right? And they're specifically called transactions. Insider trading is something different, and that's like what Martha Stewart did when she acted on a trade based on a specific piece of news that she knew that the it's called non-public information, right? And like we talk about like kind of how Wall Street gets like ways around like non-public information, but like it has to be verbal, and that's one of the things that we've talked about. Like it's actually not illegal to be on a golf course with an executive, ask them how they're going to do it earnings, have them say nothing, but you see a look on their face that tells you they're going to beat earnings, right? That is actually not illegal. Because it's not non-public information and it can be like, in a court of law, like things have to be very clear. Like, and when something's interpreted, like could be interpreted like that, that's not non-public information. But it would be non-public information. It would be insider trading if that person said, yes, we are going to be earnings. And like that's like the nuance, that's the difference. So like Martha Stewart got in trouble for basically like you go play golf with a public CEO, you ask them how they're going to do in earnings. And then they say they're going to do well, and you trade on that. So it's like a slight nuance, but very, very important, especially for you. I mean, most of the time, regular people don't go to jail for this. Like most of the time, it's higher profile people. But just so you know, you and your like whoever feeds you the information can both go to jail if someone ever like tells you company specifics and you trade. Like it has to be both, right? If like your spouse tells you that like whoa, you're gonna lose the you work at Raytheon and they tell you like there's a big deal that's gonna fall through, like that's not insider, like it's not insider trading you just knowing that, or there's not anything illegal of you just knowing that. But it becomes illegal if you trade on that. And it also becomes illegal if you tell some other friend that and they trade on it. Um, where that gets illegal for you is tough. Like if that person just does it and you could basically prove you had no knowledge, no kickback or whatever from that person's trade, then again that's not insider trading for you, just for them. But it doesn't look good. It doesn't look good for your like spouse at Raytheon if that happens. And probably even just the story is probably going to get your spouse fired from Raytheon just from that breaking. I mean, obviously, I use Raytheon for an example. As an example, they're obviously very sensitive about any information getting out, and I would just like, yeah, I have no question that someone would lose their job. Like Cracker Barrel, if you're talking about like some of the stores and how they're like some of the locations and how they're doing. I don't know if anyone gets fired. I don't know if anyone gets prosecuted for that. But that gives you like a kind of a lot of the nuance. Um, but yeah, I would say that like insider transactions and like you should always watch them. They're one of the best, especially the trends, and you can see graphs on it are very important. I always look at that. I always look at who's selling. I always look at both like who's selling and also like what their traditional behavior is as well. Um, like in terms of like, do they sell every year? Like that thing. But the other thing, like, and I've talked about this, and like I hate Weeble, but like I mean, you could look at this in other ways. I use Sage Tracker, but the only other thing that I think is like very important, like looking at insider transactions. But I also like, and you can always like ask me like who I look for. I always look to see if some particular I look most bought, most sold, and like what hedge funds are buying or selling. And pretty much, I don't really ever want to be on the other side of the trade as Renaissance, like Two Sigma, uh, AQR, DE Shaw. Um, I think those are my big, yeah, 0.72 I mentioned. Cubist, which is 0.72's like even quantier fund. Like those are probably the five, like that if I see like no matter how much I like a long, if I see Renaissance is opening up new short positions in it, I probably won't do it. That's probably enough to scare me away. It depends. Like there's some nuance there, and like the example is like if Renaissance is short, but then 0.72 and AQR opening up new positions, that probably just like cancels itself out, and I'm back to like weighing other information. But like, yeah, I actually went through all of the ways, all of my checks, right? And you guys know from my newsletters, I do a technical check. But if I'm like really trying, I would say like get into my tiebreakers for the newsletter. I'm looking at insider transactions. I'm looking at who's buying and selling, and I'm looking for like mainly I'm just scanning for those names to see if like I either like am I gonna have like a oh this supports, this disagrees, or it cancels out, and I should just like use some other tiebreaker.
So, based on this topic, there was a really funny Reddit post going around like the finance social media space of a person who was on the Boeing plane that like the side panel fell off, bought puts like as as the plane was like falling, and he posted on Reddit. He's like, "Can I get in trouble for buying puts?" Like I was on the plane. It was so funny.
You can't because that's what we talked about. That's public information. Like that plane, like it's not a secret, right? It's actually like so depending it could actually be very interesting. Like there are some nuances about that and I don't know, we've had some users drop off during this conversation, maybe it's happened too long. But yeah, totally legal. If there are people around you, like it has to be a private conversation. Anything where it's just like, hey, if there's like parts collapsing, that's actually like a very shrewd move by that passenger because that's definitely public information.
Yeah, good move indeed. So I wanted to get into the story, which you actually were on it early this morning because an update went out to all the people who have the trading letter. But Synopsys acquires Ansys in a $35 billion deal, and like I said, you sent out a thing that you were adding Synopsys. Is there any reason you wanted Synopsys over Ansys based on this story? Because um, I don't know. Sometimes it seems like the acquirer is the more bullish, sometimes the acquired. So is there a reason in this case?
I mean, SNPS, like I dropped it, like, and this is like a really good classic example. We talk about this all the time. I think it was getting hammered on the short side. Um, because of I think because it was um people wanted to get in at a lower price. And I actually dropped it towards the end of last week in the model portfolio, but immediately I saw it halted this morning and I was like, shit. Like I was like, I missed it. I've been on SNPS for a little while and these jerks were just like shorting it like so they could get a better price and they drove me away. But actually when it got unhalted, I saw that it was trading pre-market just like at a like a 0.6%, like up, and I was like, okay, I'm grabbing it at that. I know it's going to do better than that today. So that's just like an example of like, and I regret not doing it for the investing letter too, because like that was an easy slam dunk in terms of I was like, I know it's going to do better than that today. I'll hold it for like a day, but it's hard because like, and one of the things that I'm doing, and I'm thinking about if anyone has comments, I think I'm just going to make. I'm not trying to trade for securities laws reasons. But I'm thinking about just making like an investor portfolio that is honestly going to be mostly like Schwab dividend, like to start. That is just like here's a very basic like it's kind of the same thing as the model portfolio for investors, but it's like even simpler than the newsletter picks, where everything's really designed to hold for at least a month. Because I feel like especially as I do these higher frequency newsletter picks, I do feel like I really also need to offer something for like our very basic investors. So yeah, I'm kind of like announcing that here to see if anybody has comments on like what they're thinking on that, or like if you're an investor, what you think the right way to kind of like manage that is. But yeah, I think I'm definitely going to start that soon.
So would that feature be for people who are like planning to invest for decades and it's much slower pace long term?
Yeah, exactly. And part of that is like I've actually been meaning to. I was like, I just like really want like I have been like I went from like my trading to just like pulling my money out of the market. But like for a while, like I've really wanted like and I like to keep working capital like um for a like for my business basically. Like I like my money is always kind of shared with the company. Um so I was like, this isn't really good if I have to sell it. But I think the company's finally getting in a position where I could actually like buy like $1,000 portfolio of this. But yeah, most of it would just be like SCHD, I believe is what it is, which is just like Schwab dividend. And I'll really show people like how I go on that journey, you know, which is basically like I'd started out pretty heavy dividend, just like keep reinvesting the dividends. What I'll probably do is I'll do that. I'll probably buy like a long-term short idea and a long-term a few long-term long ideas in addition to that. Um and just kind of like showing people how to do like an investing portfolio but kind of like something that is like a longer term horizon. So yeah, I'll probably start that out soon, maybe even this week, to just give people a way to follow along. They kind of want to see how I approach very conservative investing, and you'll see me build my conservative portfolio like from the start because like I said, I've been meaning to start this up again. But yeah, it'll probably be like I'm looking at it, Schwab dividend is like at 75. Like I'll probably buy like 75.96. I'll probably buy like 10 shares of that and then just like pick reinvest dividends. Um and then uh just buy, like I said, maybe two longs, one short in addition to that. Um and just kind of like take it from there and start a very simple portfolio. And just so people know what I'll do with that is I'll basically like keep reinvesting the dividends for a while. And then as that grows, as I'm getting like more and more dividend income every month, I'll start maybe taking half of that and buying like other stocks I like and shorting other stocks I like and grow it slowly like that.
Yeah, sounds like a good idea to me. And Shane's on board, so we'll see if that starts later in the week. I mean, we'll be live again, so we'll let everybody know if it's going to start.
I think
We
this
have
is
a
the
story.
first time we've seen a comment from Shane. So I always like when we have ideas that bring people out of the woodworks on these streams.
Shane's a longtime listener, first time caller, maybe. We have a story
I've
about.
actually like it's interesting. I've had more and more people just like tell me that they watch these that I'm like very surprised. Like people in my life that I had no idea watch them. So I think we're doing something right here, Steven.
Yeah, we got a good mix, and it's stories like our next one that keep the people coming because this is an interesting story. So on Twitter yesterday, there was like an outburst of Twitter posts surrounding Elon Musk, who is seeking more control and another compensation package in Tesla. And the reason for this is that he stated he wants 25% of the voting rights for Tesla. Otherwise, he's not going to start AI products within the company because he doesn't have enough control, in his opinion. And there was people on both sides of the argument. You know, obviously, he's already the richest man in the world, so like him asking for like more shares and more control of Tesla, a lot of people didn't like that. Then there was other people who, you know, are very much in Musk's camp. But what do you make of the story of Musk wanting more control over Tesla for AI purposes?
So I think it's really like I actually recently just saw John Oliver special on Musk, and like I actually have like very similar thoughts to like what he said, which I was like a big Musk fan, but like I would say like some of the ways he handled, I'd say especially like the pandemic and like not even necessarily just like his opinions and like I don't even necessarily agree with him that disagree with him that much that like the government overreached in terms of how much they were enforcing some of the pandemic stuff. But like the way he acted like it was he was a real baby about it. And I don't like to see adult men acting like babies. Um, so that's thing one. Thing two is I actually like got pretty scared about like apparently he now controls like 60% of the world's satellites. And like, especially in Ukraine, where like Starlink was like providing internet, he started to exert a lot of political will and a lot of political influence on that situation and our country. And that's really scary. Like, and I think the point is made where it's just like, someone having that much like power over our government, um, it's not supposed to be that way. Like, and I would say and I'm going to link this back to AI. Like Google, we talk about Google and like the fact that they've allowed to exist as like a monopoly for like way longer than they should, and it makes them a strong company because I don't think anyone really intends to do much about their monopoly. But we'll see if Microsoft can do anything. I feel like a lot of people said that like Chat GPT search that was going to happen. Haven't really seen that like come to fruition that much. And like I think we have seen like I don't know like but probably the height of GPT mania. Unless there's some new there could be some new innovation. Um but anyway, like I would also say the following things about it. Like one of the things I don't really like about like his behavior is even something like acquiring Twitter X. Um because it seems like he disagreed with how it was run. Which like maybe like I could even see understanding and be like, okay, like maybe as an organization, you should be like you should think more about like I think especially appealing to both sides of the aisle to an extent that you don't like make people that pissed. I put that in quotes because like I don't know if anybody ever has like the right to be that pissed. Um where like their solution instead of like diplomacy, which I always advocate for, and they're going to take meetings with Elon Musk like anyone will. And I think diplomacy, meeting in the middle, attempts to compromise, you always get better results than that. But anyway, I would say like more problematic than the actual acquisition is like his attitude, like the quotes on him, and I saw this on John Oliver, where his attitude actually to advisors, like advertisers that left because of like anti-Semitic things that he said. Um, like to me, he was just basically like, "Fuck you, we don't need you." And by the way, won't you feel bad about all the blood on your hands when Twitter goes out of business or X goes out of business because you advertisers all left? And it's just like, that's bullshit. Like, you cannot blame your customers for leaving because like the public and they have problems with what you as a CEO said. That's like insane. Like, thing two is like him actually trying to like put the blood on their hands is just so immature and stupid. And he's even like, fuck you. He even says that. It's just like, what are you, a goddamn teenager? Like you're a CEO. Like you should be more like at the very least, even if you have those feelings, try to be more diplomatic. And like, see, like, like you already fired 80% of Twitter's workforce. So like to make it seem like like it's the advertisers that like put Twitter out of business, you actually put it a lot out of business already yourself by just like getting all those jobs. So all like the guilt around, like the advertisers putting them out of business, actually there's more blood on your personal hands in terms of jobs lost at Twitter than any of those advertisers could even possibly have now. So like there's a variety of real bullshit things about that. But the point that John Oliver made that I really agree with is this is all just like ego stuff. Um, that is just like he's been enabled too much. And I think that this is really true. And I think it was a really good point. Scott Galloway, really sharp guy in terms of like products and growths, said this. And he said, Elon Musk is a net positive for society. And like, I would agree with that. But he goes on to say, like, the word net becomes problematic because he's basically like, too often, because he's a net positive, like, what we're seeing is like, we just brush aside the negative stuff and allow the negative stuff because he is a quote unquote net positive. And some of that negative stuff is the extreme treatment of his employees. Like apparently, like you pick up his calls when he calls you at 3 a.m. in the morning, and that's not necessarily like a rare occurrence. And like I'm just like, if you want to be like that and you want to make it an option to be like that with you and you promote around that, that's one thing. I don't think that like even if there's like tacit pressure to like work insane hours, I'm not sure I really support that. Um, But um, I would say that that pressuring people to do that, and like, a lot of like the guy who was quoted in it, like one like a very senior engineer at SpaceX, made it seem like, Musk was actually like picking at his insecurities to like get him to like pick up those calls at 3 a.m. whenever he would call. That is really problematic behavior. And it's kind of like, I like to analyze things completely, right? And to me, like, when you see him, this latest thing where he's demanding voting rights, it's just like leveraging his AI, demanding voting rights from your shareholders that fucking believe in you already. That's bullshit. You gave away your voting rights. You gave away your position. You could have held more stock. You sold it. You gave away your voting rights. And part of the reason you gave away your voting rights was because you wanted to acquire X and you had to sell shares to acquire X. And now you want them back because you needed to get into like a pissing match about content. No, that actually kind of makes you a petulant child. It doesn't make you like, and like all of this, he's, keeping people up, indulging people, like all of this. And like, it's even like there's someone who I like met who's like very like, he was actually like a very big person in finance, was talking about bringing him on an advisor that, um, that actually builds these things called orreries for a lot of his friends. I think he built one for Jeff Bezos. But told me a story about how like actually when I went in, we went out to lunch and he showed me to his like little laboratory, which was super cool. He actually built submersible. He went to the bottom of the Marianas Trench. Um, and he actually, when I walked in, he showed me this thing. He was like it was an orrery, which is like kind of like a to scale like map of our solar system kind of thing, and the planets go around. I'm sure you've seen them if you Google it. But one of them had like a little car as Earth. And when I walk in, he was like, yeah, I made this for Elon Musk, but everyone thinks he's acting like a pretty big jerk right now. And this was like, maybe close to 6, 7 months ago. And I think the funny thing about that is first, like I didn't know this, but definitely talking to this guy, it definitely seems like there's like kind of one circle of these ultra wealthy people that they all like run in. Where he was like, oh, he's out of like people are mad at Elon Musk. He's been out of the clique a little bit. So that was like I was like, I actually didn't know that was true, but like kind of like concerns like some suspicions all of us might have um in the back of our minds. But I'd say the other funny thing about that is that, like, yeah, even like his friends or like people like just like him that have tons of money think he's kind of acting like a kid. And I think like that's the problem. I think he is just like so brilliant that like he's getting indulged way too much. And we're kind of seeing like the snowball effect of how much he gets indulged. Because the truth is, he might get those voting shares. And it's not a bad idea to give him those so he doesn't start some other like AI company and like tank the stock for Tesla investors, because a lot of people invest in Tesla for things like the Tesla bot. So if he does actually like start to follow through on that, it will really hurt Tesla stock price. So that's really annoying. And like he probably will get his way. That's what I'm saying. And that kind of thing, like if if I would say, and it's like honestly not on the shareholders of Tesla to hold him accountable, but like it is kind of on the people around him to start holding him accountable because he's not being done any favors by like doing this behavior because like as brilliant as he is, eventually people are going to lose patience with him. His own people are going to lose patience with him, like the people that work for him. And that's a real shame because I do think he's a brilliant person that could really help humanity. But like people only like, and that's what I'm saying, the shareholders will only tolerate it. But people that work for you will only take so much of your BS before they're done.
Yeah, so I wanted to spin right into another story, which I think it flows well since Elon's like enormous wealth is part of it. So there was a report put out by Oxfam of the five richest people in the world, which is Bezos, Buffett, Arnault, Ellison, and Musk. Their net worths have more than doubled since 2020, and combined, they've gained $869 billion worth of wealth in total. And it was a story that was highlighting equity inequality in the world. And the past 4 years or so, I don't know if it's normal for the richest people in the world to gain that much wealth or not, Maybe you could share some insight on that. But the only way their wealth goes up that much is if their stocks and the companies they run are increasing that much. So I think it shows the importance of people to get into investing and starting as early as they can.
Yeah, I mean, I think there's a lot of things there. Actually, the other funny thing that I just like I thought was actually like hilarious was was that apparently like not only is but Musk is the richest man in the world, but apparently he's also the first man in the world to ever lose $200 billion in their net worth. So that is like a pretty funny, like, both of the Musks we're talking about, like, brilliant inventor and also just like getting increasingly good at just like completely shooting himself in the foot. Because I feel like if he was just like 25% less of a dick, like he like X would be like humming along now. And like I even say that just like fire 50% of the people, not 80. Like the morale problems when you do stuff like that is going to be just as big of an issue as anything else. But yeah, I mean, Prospero is obviously one of the things that I think is very important. Is like I think one of the things increasing this wealth gap is like the access to investments that people get and like the kinds of things that we're trying to fix by like creating a community of shared alternative data that get delivered for free to people because like increasingly like yeah things like AI billions of dollars that are spent on tech and alternative data sets like whereas hedge funds used to be at certain levels, now the most advanced ones that only few people can get into are like a place like Citadel that just makes like guaranteed money because they're like literally orchestrating it in the markets. Like you get into Citadel, like, you're going to grow your wealth faster. Then we have all of these like, the tax code in this country needs to be overhauled. And you have things like it's both sides. You have like the Republican tax cuts that was just like a crazy handout like in terms of like that, and especially like I would say like real estate owners, even more so. But then you have the Panama Free Trade Agreement before that by the Democrats, which I think is maybe even more damaging because that's a tax evasion bill. Like, and we actually know because of the Panama Papers, we actually know it was a tax evasion bill, and we actually know that like actually since it's been passed, it's cost the country about like $10 trillion. So where is that $10 trillion going? In the hands of these wealthy people. So they're paying less taxes, they're evading more taxes, they're getting higher and higher returns on their investments because of this access to special tech and alternative things. Um, so yeah, that's how it happens. We can only fix the one problem, trying to like reduce their alternative data advantage, help educate people to close the gap of the actual investment returns they get. Like, I'm not touching the tax code or the tax evasion stuff. You know, you might end up dead like the woman who published the Panama Papers, who I think it's always very important to like honor her. She died in a car bomb in Spain. And if you think that was an accident, you're probably a little too naive. Uh, but yeah, like I think that that is, very, very important. And I think that like, yeah, I don't, and that's the thing. Like, if you're looking to point fingers, like I don't necessarily blame wealthy people for trying to find loopholes, angles, like whatever. I don't love that behavior and I'm definitely not going to pursue it myself. And if anything, I'm going to be like someone that like advocates there to be like better laws for fair share paying. But at the same time, I'm not going to be the only one paying taxes like when no one else is. So I will advocate for those laws. But yeah, at the same time, I just think it's like it's kind of like when people used to complain about the Yankees, where it's like they changed the rules and it's harder for the Yankees now and it's great. Like I was a Yankees fan, but it's just like, this team is playing by the rules. The Dodgers are like doing it. They're delaying their contracts. Like they're delaying by the rules. And I'm not a hypocrite. I'm like, the Dodgers are playing by the rules. I don't love that they're building this super team and it's going to suck to play them, but that's how it works. Like, so I don't necessarily blame them. I actually like think the government just needs to do a much better job actually like doing their job, like collecting taxes. Um, so we don't like just build a bigger and bigger deficit. Um, but at the same time, I think that like people like me and others need to think about structural fixes. Because like I'm not a big complainer. I'm only gonna watch the tax code get worse and worse for so long before I'm just like these people aren't gonna do anything to help. Um, and I do think like yeah, like tackling that third problem of just doing things and like building a mechanism to help people like equalize the returns, smooth out like the ability to get these higher returns, access to that. Um, and like also doing things like within our business strategy to like reduce the advantages that places like hedge funds have on tech. Uh, yeah, Mario, definitely, that's a great comment. Yeah, the car bomb is a little more obvious than Epstein, but like also like the coroner was straight up like and like the people are just like, yeah, this guy was killed. Yet like the headline is suicide, which is very weird. Like I don't even know why people even do that. I mean, I think the answer is clear, which is that like a certain amount of people will just buy that suicide headline. So they're just like, hey, if we even get 50% of the people that read this, that's great. I think that's probably how these people look at it. But like, yeah, I mean, a lot of people don't even know about the Panama Papers and like the reporter that died in the car bomb because people are like so like the cover-ups are so good. And I think that that's information that everyone should know. And it's like not like, yeah, like I don't want to do anything. Like I don't want to mess with those. Believe me, I am not coming for those people that want their tax evasion. Like I have no plans to do that. I don't want to end up dead by car bomb. Like I'm very comfortable just being like, hey, I'm going to work on my market things over here. I'm going to operate within like all the laws that are like that exist now, and I don't really want to affect the laws that much. I will operate within the laws. I will do my best within those laws. I don't have any plans to try to change or make light of like like because it's just like when you look at the laws. Obviously, I'm just saying it's kind of a disaster. I'm not proposing any solutions because, quite frankly, I have no idea how you solve all this stuff. Um, and the big reason I have no idea how you solve it because even if you passed like better laws, I don't think anyone in the government has any desire to enforce them. I think that like generally anything that the government touches these days, like that's new, ends up kind of functioning worse than it used to. Um, so yeah, I'm not touching that stuff. I can call it out and just be like, hey, like, and I think especially like the important thing for me always is like both political parties like screw over. Um, both political parties screw over um everyday people constantly. And I think it's just like very weird when someone is so like when someone is just like so oriented around one of political party being like good and the other bad. When I'm just like, I don't know, like uh, maybe I could agree that like however you view things, I could very easily see you saying like, I think this one is worse than the other one. I could easily see how it's good. It's good to land there, but I don't know how anyone lands on their political party being good. That's the one that I do not understand. Can't for the life of me understand because no one's like, especially if you're an everyday person. I could see you liking either political party thinking they're good if you're a billionaire. I could see that very easily. Like if you're making anything less than $1 million a year in income, which I imagine like most of my listeners, readers, that kind of thing are not, like the political parties aren't doing anything for you. They're not doing anything for you. They're definitely like, as I said, some of them are doing less to hurt you than the other one, and that's very fair. Um, but they're not helping you. Just to be perfectly clear, they're not helping you. And you could, if anyone wants to post in like how people think they're being like more helped than hurt by either political party, I would love to talk about that, but I don't think so.
It's a sad state of the world, but there also could be a sad state for the market developing because we have the 10-year yield rising from its lows. It's back over 4%. It crossed 5% last year, and everybody expects the Fed to cut rates this year, which would help lower the 10-year yield. But with the last CPI number came in a little hot, and now the yield's rising. Do you foresee any scenario out there? I know it's not likely, but where the yield would make a new high for this cycle?
Um, yeah, I mean, I think that like it might inch up, and some of what we're seeing is like I don't think we're gonna see a I don't think we're gonna see a another raise anytime soon. But I think we might see like basically like the cuts delayed. Let's take a look at the latest Fed watch. Um because I do want to like add, I think that'll be good to this. Oh wow, we're really zeroed in on this ease now. 100%. So like yeah, I think what we might see is like just more concern. Like we could see like that, like no change. Like right now, that's at 35% for March. I think we could see that, and that could push it up a little higher. But yeah, I think we're probably getting near the top of that. But also really remember in terms of the market, like when like the yield curve inversion changes, like the market traditionally does poorly, right? And I think the very, very important thing to remember there, and why I'm just like, and I said in my newsletter, it's like this is going to be a very tough year to predict because there are two like very strong historical market signals that are conflicting there. There is that you rarely have two bear years in a row, and last year was a bear year, so there you go. And then the other thing is like when the yield curve inverts back the other way after like interest rate rises, like the market tends to do poorly. So that's why I even said like I could see us going up 30% and then losing all of that this year. Like that's basically what I'm saying there, and then gaining it back because I do expect this to be like I like that first rule I sent you, like the market is just up more than down. And like people bet on the US economy. They will. We're going to have to be a lot worse before they start betting on it. So that's the thing. But like in terms of other strong market signals, that yield curve inversion is a pretty good one. Now, I would say what bucks that trend is the other thing that I said, which is the AI thing, which is just like we've never seen this kind of AI automation, which is like a new world of like because like part of like why that like yield curve inversion um ends up uh kind of creating a bear market is or sorry like a bad run is a lot of that has to do with the job market, right? A lot of that has to do with but by the time interest rates feel their full impact, like you're going to have things like I've kind of been talking about, which is consumer spending impact, job loss, things like that. But like we're not seeing tons of job loss yet, and Powell talks about that a lot, because there's new jobs being created, like like tech driven new jobs, among other things, being created. Yeah, but we have that other thing, which is just basically like uh, which is just basically like the fact that um that kind of boom, that kind of like, things to like the big cloud manufacturers, chips, like all of this tech stuff, um, that could really be enough to carry the market, um, even with, the traditional yield curve inversion things happening, and a consumer credit crisis happening. Um, do we have another question, Stephen?
I just have a Jeff Bezos quote before we get into our ending stuff. I don't see any questions in the comments.
Okay, I'll be right back. I know last time I turned off my camera, you were a little confused, but I'm going to be here and listening. I'll just be right back.
Okay, I'll read the quote for you and everybody who's watching. Have I been muted this whole time? How long was I muted? Thank you, everybody, for watching. I said like
I
and
heard nothing, Stephen. I heard
oh my
nothing.
God, I was muted. Thanks for all of our viewers who watch. Please like and subscribe if you find what we post in these live streams helpful for you in your investing. But I'll read this Jeff Bezos quote, which we've talked about Amazon's process before. And I think this kind of mindset is a little view behind the scenes of what made all that tick from the very beginning. So the quote is from Jeff Bezos: I believe we are the best place in the world to fail. We have plenty of practice. And failure and invention are inseparable twins. Um, so do you agree with that quote? Can you be an innovator and push the boundaries without being willing to fail?
Oh no, no. I think it's just like honestly, like I have so many things to say about that. I'll talk about like general before specific. Um, the first thing is that like there's a great if you've never read Lean Startup, you should. Like, and honestly, like there's like very like startup driven things that just like make me want to pull all my hair out because it's like so self-indulgent. And Lean Startup is a little self-indulgent. Like, I'm not gonna lie to you guys on that. However, like one of the things that I really like about Lean Startup is it talks about this like idea of like testing things and like moving on ideas, making sure they're good before you invest in a lot, and like basically like innovation needs that kind of like lean um attitude. And small teams are better at doing that because the larger your teams tend to get, the harder it is for you to just like drop a project, especially if there's like large stakeholders. And like, lean and failing, like, because it's like when you have that kind of attitude, it doesn't even really matter. You could run a test, you could do it, and that's like a failure. But I actually consider that more of a success versus the old way of just like going with your best first idea. And maybe it takes you like a year and tons of money before you figure out that it doesn't work, or you run a small test and figure out very quickly that it doesn't work. And that's a failure. Like that's like you might call it an idea failure, but a capital expenditure efficiency success. And like, ideas are a dime a dozen. You need to move on from many ideas quickly. Um what like usage of funds is so much more important. And like I'm talking about personal because like I can tell you like a variety of things that this is true for me. My first company, I did it for 8 years. It ended up like basically it built a lot of IP. We worked on some cool projects. We beat some large financial institutions on like projects head to head by like the innovative way, our great ideas. Um, but we actually never built a product. My like one of my co-founder just was he was the technical guy, and he actually like didn't really want to put anything in front of people for real for whatever reason. That's a whole other thing. But yeah, like one of the things that like I actually really wanted from the first to second company was like feedback. I was like, we can't just like operate in this silo and say like, oh, we're building cool technology. It's like, no, the technology isn't that cool if nobody is interested in using it. Or like you're not building it for some kind of market or building it alongside a market. And that's the first thing I learned. But like more importantly, that like resource efficiency is so important because like as I said, this is like V2. This app that's out now is our V2 public release, but it's V4. The first two versions, like I would say, maybe only 5 people saw the first version of Prospero. I was really excited about it. I spent like maybe I didn't learn this lesson well enough. I spent way too much time building something. I remember one of my friends telling me that it was just like, yeah, I don't know what to do with this. It looks like you built this for you. And I was like, that was true. I did kind of build it for me. And I thought like he's a smart guy, he knew the market pretty well. But like I was like looking at like probabilities of success. Like, and I think I could probably like, yeah, well, I can look for it. I can pull it up. Maybe next week I'll show you the first Prospero. I'll show you guys the first Prospero interface. Um, but so I think that is a very, very important. I think that's a very, very important thing. I really want to find it because I think I know how to find it too. I'm gonna multitask, but I think that's like a very, very important thing there because like we did go through two versions where like we looked at it, but like basically like what I'm saying is like ideas are a dime a dozen, and I have tons of good ideas. I have tons of bad ideas, but like figuring it out super quick what the ones are, as opposed to even like how some of the things were done in the first version of Prospero, or the first couple versions of Prospero, which were like very much about oh, these are V1. I don't have V2 screens, but I found V1 for you guys. Um so here we go. I think I could probably dig up V2, but I don't think it really matters as much as V1. So yeah, like this was V1 of Prospero, uh, which was like probabilities. Like you could see like Citibank versus SPY, like the probabilities of a gain and loss. Obviously, it's come a lot farther, but like yeah, we did this. We actually had like some basic information. The most access. Like this was like a lot of value investing stuff. But yeah, it's just a perfect example of like I needed to learn that lesson better, honestly, because I spent a long time on that and like building that. And I actually hired like this was before I had anyone on my team. I was doing this alone at that time. And I hired some like developers in India to help me get like that MVP online. And of course, that was far enough along to get like a team for the next version. Like my co-founders now came on after that. But like that's the perfect example of even like learning that first lesson of being like, I need to get this in front of people and still not doing that fast enough. And now like I use what I'm advocating for. Like, I fail quickly, like, and often when I'm just like pitching ideas to people. Like, I talk to a lot of retail investors. That's one of the reasons that, I hold these like one-on-one sessions. And like, yeah, my email's there. If you ever want to have one with me, I'm very happy to do one-on-one sessions with people to just tell them like what the best ways to use the our app and newsletters are, because like I learn a lot from those. So yeah, take me up on that. Like I feel like the people that do also learn a lot from them. Um, but yeah, I think that that's like really, really important. And the best innovators, like you can even see the difference in like, I'll tell you something about like my friend that worked at Amazon versus like what I see in Google all the time. Um, my friend that worked at Amazon actually ran like their like a very specific like car audio. Like he was like he out of business school, he was like GM of this car audio thing. Um and yeah, basically his job was to like source these products, find the right people, iterate on like, basically how to build out that whole section of Amazon products, right? And that's how detail oriented they are. Is like they got an MBA just to focus on that specific thing, right? And then you have like I would consider like the complete opposite, the way like Google builds products sometimes, which is just like what was it? It was like their Google Circles, for example, where sometimes they're spending like hundreds of millions of dollars before it even gets in front of someone. And then you're just like, what is this? We don't like it. And that's the perfect example of the opposite. That wasn't a good product. I do not know how they tested it or why they did it that way or why they don't use lean startup principles. But like that is like when I say like Amazon is a process company, and Google I like because like they know how to do big innovations. So like maybe that's just the way they make big ones, and I don't mean to insult them that much. Just like I am much more, and I would advocate to like the point of Jeff Bezos, like for an Amazon type approach, where it's just like, no, actually the best way to start is to shrink this problem as much as possible. And like and then just be like, okay, let's make sure we're taking every little step as good, and that'll roll up to a nice approach. And that's a really good way to, like I'm saying, fail fast, test little things. Like if you're doing that, you could find out very quickly that like certain types of car audio or certain things or like or certain like vendors or whatever, if you're taking a very small like kind of approach to building, you can like learn all these tough lessons fast. Like, or you can like, and that's like, and I use that because it's like such a small aspect, like the car audio business, to like be getting all of those little data points before you just like roll out car audio, right? But then you have like Circles, something like that, or Google Glass, where we've made fun of before, where like you're investing so much money in R&D before you even find out that your very cool co-founder even looks like an idiot when they're wearing it. Like that should be like the easiest test, like because we're not even talking about the product, like we're like and how it works. We're actually talking about like I've said this before, like I don't think I've ever seen Sergey looking not cool, like other than when I saw him in those glasses. I like this guy looks like a fucking idiot. Like, and like I've like never like I think Sergey looks super cool most of the time as actually like someone that is like I think a pretty fashionable like CEO and like has interesting things to say when he talks and doesn't feel the need to talk. I got a lot of nice things to say about Sergey, other than the fact that he looks like a jackass in those Google Glass things, and to not even figure out like meaning everybody that ever put on those glasses looked like a jackass. If Sergey can look like a jackass, everybody did. So, I don't know. So maybe they tried it on women and it looked better. I think women's like fashion, but like I imagine any cool looking woman would also look pretty lame in Google Glass. Um, but yeah, it's just like the perfect example of it's just like these are very basic. Like, hey, try these on. What do these look like? You don't even look like you don't even need any software. Like that should happen on like the third week of making Google Glass. Like, hey, does anyone think we should try this on and see if we look like idiots? Like, but no, nobody did that. Or like nobody was honest with each other about looking like idiots, which might be a bigger problem than the actual looking like idiots. But like it's one of those things where it's just like I think pretty much had this like beyond the fact that it didn't work very well, I think everybody's first thought when they saw these people wearing these Google glasses was like, man, these people look like fucking idiots.
Yeah, now Apple's betting on, you know, multi-thousand-dollar VR headset, so we'll see how that goes.
Well, I mean, like Apple's definitely better as at least being like, getting the design thing right. Like, but it's just like, yeah, it's like that's like such a basic test where you're just like, oh my God, why? How are you like this? But like that's the thing about Google where I say on the other side. Like, no, I mean they do have this monopoly, this search monopoly, but like there are some creative, innovative things that Google just does so well. They could afford to do that. But that tells you like if Google actually had more of like a lean approach like Amazon, like I think combined with their innovation, they'd be, the largest company in the world as opposed to kind of like the third or fourth fiddle to like Apple and Microsoft. I think they should be just as big, if not bigger, than those companies if they were better at, A/B testing. Because in terms of just like, like, and I want to say like talent, innovation talent. In terms of innovation talent, in terms of like, I would say like back end, right? Like front end kind of design, like Apple's got that. But if you're talking about like back end talent, they're probably like the biggest in the world. And I would say like back end is more debatable, just as important as front end because like the back end is what actually makes it work. Like people use Google search because it works. Like that's why they use it. That's why it took off. So like yeah, and generally like taking something that works and packaging it in a nice way is a lot easier than like packaging in a nice way something that doesn't really work. Um, and I think increasingly that's been Apple's problem. You know, where it's just like, yeah, the design is really cool, but everybody's catching up in terms of similar functionality and price for functionality.
I agree, and I think it's time to move now into our closing segments. Do you want to do the app tour for everyone?
And like you might
So the
want to
v-
follow like the plan for this, everybody, is you might want to follow along. Um
so the
because like the
viewers
plan
now,
for the
sorry.
what?
So the viewers now are kind of getting a behind the scenes. Tomorrow's video will really be the real like version of this that you want to see. But I think yeah, they could follow along on their phones with you.
Yeah, Mario, good. Like, yeah. It's like I saw some people in the wild like this, and I was just like, I don't know how you expect to be taken seriously. Like, it's just like, I mean, and I don't know because like cutting edge technology, it's actually really challenging to make it look that stupid. Like, but I don't know. It was like, yeah, I don't know. That's neither. Okay, so what I'm actually gonna do here is like even though you're not going to see this video, um I am going to make like you can follow along. I'm going to try to be very descriptive in terms of what I'm doing and you can kind of follow along here. I'm going to tell you all the ways that I should actually update Prospero's signal to a bear signal today. All right,
And
microphone
your screen
on.
recording, right? Your phone.
I just started. Yep, I'm
Okay.
about to. So we're just going to start exactly where you land in the app right here. Short-term bull, long-term bull, uh, short-term. Oh, damn it. This is like, I have to start again. Sorry, guys. Um, if you don't pick the right thing, I think I have to pick photos. Like, Prospero. It like doesn't actually, it's like, I don't have access to this anymore. Okay, we're going to try again. Sorry, guys. So when you're looking at the start of the app, short-term bull, long-term bull, short-term bear, long-term bear. I was actually talking to someone and it's super interesting because like I was actually just like, oh, maybe it's not obvious. Like some people were like, I'm following the model portfolio. Like, what's the way to do it? And actually, like the best way to see like what my favorite picks are at any given time is going in these. If you want to ask me like, hey, like, what are your favorite short-term bulls? It's probably going to be this list, this short-term bull list. And I'll tell you like kind of how I look at it. Like, I look at this as like, obviously, oh my God, Meta lost its upside breakout title. it is at 97. I wonder. We'll go to see who's at the top now, but that's very interesting. I'm interested to see who it is. So like, Meta. I want to look. What I'm looking for here, and we have it like literally listed, is like high upside, low downside, high profitability, but also like, in anything, I want high net option sentiment. So I'm kind of just scanning like Google for that reason. Netflix is next. Like, I don't like that as much because like the upside's at 60. That's not as much. Like Alibaba, same kind of thing, lower upside. Like, I don't really like China, as I've said, I'm not really like Microsoft, same kind of problem. It's very high on because it has high net options and net social, but 61 is lower than I'm looking for. PH I like because like that's I believe that's an industrial. So like yeah, like that's a great net options net social. I would leave these feeling good about that. Similarly, Vertex Pharmaceuticals because it has that high upside breakout, high profitability. FedEx is a good example of something at a 52 upside. No matter how good the short-term signals are, I don't really touch that. And then similarly, like Walmart, that's very interesting. High net option sentiment, not high net social sentiment, high net institutional flow, but not really anything I like with a net option sentiment at 53. I generally like wouldn't don't touch stocks unless they have net option sentiment above 60. Long, short, whatever. Okay, now I'm moving to long. Meta still at the top. Like Meta, like Booking for the similar reasons because it has like this is reverse. Because now we're looking at long term, right? So all of the long term are going to have high upside, low downside, high profitability. So now I'm looking kind of on the other side if the option sentiment is a match. So Booking and Melly, I don't love their sectors, and this is why it's again really important to read the newsletter because you know that I don't like the sectors for Melly and Booking now. Um, so like SNPS up there, really like that. Would like to see a higher net option sentiment. But looking good. Cigna, obviously, we really like it. That net option sentiment of 75 is pretty high for a healthcare stock. And this is the kind of thing that it's just like, unfortunately, there's just no substitute to like learning these kinds of things on your own. Like I'm giving you the general, like Arch Resources is a good one, like high net options at 87. TDG, I've added a couple times. But like, yeah, as I'm saying, some of the stuff you do just kind of have to learn um how it situates. And like I'm saying, like, yeah, like Cigna at 76, that's a good net option sentiment for a healthcare company. Then on the short term, very similar things like iRobot looks like a good one, FRHC looks like a good one. When you start to get into like DEI and ADC, that's when like I start to be like, again, like net options of like 37, 39. Blackstone went above. We saw a live update. Perfect. Like net option sentiment of 37. That's pretty high for a real estate stock where I like them because you can see it a lot lower. 39 is also like good. LPL I like pretty well. That rhymed nicely just because like that's actually again like running. We can come and take a look, and we haven't really done this yet. Oh, actually, I guess I don't. And people can see the graphs are. This is like why it's good to click in. Like I thought it was running pretty high, low, but if you see, we're seeing kind of like higher lows versus early in this graph. So I changed my mind. I don't like LPL on a short based on like what I'm kind of seeing on this, elevated, um, elevated uh net option sentiment in terms of lows. Um, but let's see. Let's see if we can find a good trend. Like, yeah, I'm actually going to probably go add ESGR at least to the model portfolio in a second because you're kind of looking at the opposite there on the net option sentiment trend. An excellent downward trend on net option sentiment. So, like, yeah, I'll probably move on that pretty soon. And we are seeing like a general uptrend, an upside breakout, and a general downtrend. So that's like a slam dunk. I might even add that to the investing letter as a short. But we'll see. Uh, all right, that's short-term bear. And I think the takeaway here is like, yeah, like I think on either long-term, on either short-term bull or long short-term bear, you definitely want to see the trend on net option sentiment. And maybe I'll like look at a few of these so we can kind of talk about what I would view as a good and bad trend. And like this, I would actually call like a medium bad trend for PH. And I'll tell you why. You see like more stable net option sentiment like here, like basically like a low of 60. But now you see it bottoming out at 29, at like 31. At the very least, it's more volatile. So this, like I just said, I kind of like PH. I changed my mind. I looked at like net option sentiment. I don't like that net option sentiment trend. Um, but on the flip side, this is great. We're finding easier examples. I like we should check 71 right now. I like this vertex net option sentiment trend because you see like this low of the opposite. Low of 65, low of 67, low of 60. Then we have this low of 63. And then we have like kind of a low of 70 yesterday and back up to 71 or 70 this morning, right? So that's like the opposite. Like, and you see a lot of these different kinds of graphs. But it's super important, you know. Then long-term bull, like one of the things I want to, or sorry, long-term bear. One of the things that I look at, like, yeah, that tends to be higher short pressure than I really like. I kind, but like it might be a good time to short beyond. I'm actually going to look at that a little more. I'm going to look at the technicals um when I do this because, like, yeah, like beyond can be a very attractive short, but it can turn around quickly. Um, Looking at SLS, um, excuse me, 1 second. Yeah, looking at SLS, I guess you can edit that out. Excuse me.
Hope you guys are following along if you're watching. We're just going through the Prospero.ai app tour. George has it. We're going to be posting the actual video tomorrow on our channel, so it'll be what George is
You
looking
will
at.
have to edit that out of the video.
Yeah, no
But
problem.
yeah, I'm back. SLS. Um, this one we're looking at this. Um, then yeah, I mean, we've got net option sentiment, but one of the things is like this isn't actually too helpful because it's like performing within a narrow channel. Um, let's see, milestone we've like had and dropped. Like I actually don't like this trend is like a good example of like on milestone on net option sentiment heading. Like I do like the upside breakout is going down. You see it going down from 25 to 21. But again, when I look at those ranges and we're talking about missed milestone, like I like to see like a larger range. Like when we looked at some other ones. Let's look at a good one. I think we just added Wish. Let's see that. Yeah. Wish is definitely one that I'm seeing a good trend on net option sentiment. Because look, we were seeing a high of 71 a little while ago, Wish, but now January 11th, the last high, that was 58, and we're sitting at 45 now. So that is an example of a really good trend for a net option sentiment on Wish. So that's kind of how I look and qualify. And just to like wrap this up again, um, what I like to see on those is like, especially like a good trend on the metrics in addition to objectively good metrics. And then you want to situate for the sector also. Just get to know kind of like what it runs for on that. But like, yeah, what I'm basically saying is the nice thing is if you ever want like to know what my ideas, like what I think the best and worst ideas are for the market, that's what these sections are for. I'd start right there. Like there is some nuance beyond that. Um, but let's go into a couple other things. The screener I'll start at quickly. We're actually going to start having push notifications on the screener. I do have to update it. I'm not that like good at doing that part yet, and I do want to change it to a bear screener. I probably will do that at some point today. Um, and um, and so yeah, I think that that feature is going to be something that I'm going to try to keep more up on. But that's a really good way of basically seeing like both like what you can't tell when you look at our picks is what my market view is. But screener will like obviously like I've held this since 12/15 this screener. So like that is a pretty bullish market view that I've had and like pretty correct since then. But I'm about to reevaluate that a little bit, probably today, right? So the only other thing that I think is important to stop at is like, these browse by stock signals, right? So I'm going to look at upside breakout because I actually was curious. Upside breakouts back to 100 on Meta, and I do like to get ideas like this as well, where I'm on highest upside breakout, where I'm just looking at like Meta, Tesla, ANET, Arista Networks. It didn't make our long-term bull or bear, probably because its profitability is 68. But I'm looking at ANET and I kind of really like it. talk about a great trend of higher lows on that's a good thing to add. I forgot what the other one we said we were going to add was. Oh, ESGR. Um, ANET looks like a great ad on the long side. And like basically what I was looking at when I was in that last screen is I was like, oh, upside breakout of 85, like pretty high in the rankings. Good, good net option sentiment of 73, a good trend of net option sentiment. Like, yeah, that's a really good example of like not being in a long-term like bulls or short-term bulls, but like finding a stock that I really liked on that list, right? ESTC is another good one. Let's check it out. Like I wasn't really aware of that, but it has a 79 upside breakout. But I don't love the net option sentiment trend because like basically what I'm seeing a high of 90. I'm seeing a high of 94 on January 5th on net option sentiment, then 96 on January 5th. So like, yeah, we're starting to see lower highs. And so I don't like that trend, right? Upside breakout is going up, downside breakout is going down. So ESTC is all right, but I don't love that, right? I'll just do a few more. I'm in upside breakout right now. Um, then, the other thing and one thing that I want to call out, and I will, is like I might look at profitability, right? And here's the other thing, and I'll scan it like this, right? I'll scan profitability and I'll say, oh, AutoZone is actually pretty good because like it's got very high profitability, but like high net options, pretty high upside breakout to match. So I'll go in and I'll just be like, yeah, I like that higher low on net option sentiment. And the other thing to just make sure everyone's aware of, we have these new help screens where if you click net option sentiment and swipe up, you can really see how you can use these signals, like more detail on how you could use these signals. Like I actually really like the new upside breakout and downside breakout ones. So like that's the way that we basically use this. I don't want to make it too long. MKL is an example of one that I don't like here because it's got a 32 upside, even though it's 83 net option sentiment. Like I don't love that. Like I bet if we look at Broadcom, like, oh, I actually like that net option sentiment trend. So Broadcom is good, very high profitability. That's one of the reasons we're looking at it. Like similar with Chipotle, I'm interested to see BlackRock, what's going on here. Like this is a good example of an increased volatility, and we don't really like it, right? Because the prior low was going up. Like we see the low of net option sentiment 63, then we see it 68, then we see it at 73, but now we have a new low today of 44. So don't really like BlackRock because of that. Now I just want to see like let's check out like how we might look on the short side, right? And I'm scanning the same way. I'm just like looking for the lowest profitability, and then the first thing I'm looking for is low net option sentiment. That's what I'm scanning for. All of these above 50 means I don't really care. 45 is okay. I'll go take a look at iClick. Don't love that net option sentiment trend. At 45, it would have to be a lot better. 74, none of these are matching up very well. But like, let's see, like, let's look at another way that I might find it similarly. Like, let's look at the lowest net option sentiment, right? That's a good way. Like FRHC is something that we hold. This is interesting. ZYXI. Let's take a look. Let's take a look at this. Only 38 downside breakout. We don't love it. And this is kind of like curving back up a little bit. Even though it is low, this is something that like I would say like with that high short pressure, especially that kind of makes me nervous on a bear position. I could see myself doing this, but it's not something that I love. Um, Williams Sonoma. Oh, I'm like that's a very high low, great net option sentiment of 8, but like that upside breakout is way too high. Blackstone. Let's take a look. Um, Downside 60. Yeah, I could look. I'll look at the technicals on Blackstone. Um, okay, so like I'm just typing those here. Actually, new longs we found. ANET, new shorts, VX, ESGR. We're gonna look at all those in the technicals after when we look at the model portfolio. Um, and we're almost done. Pam Energia, I've never heard of this, but like let's take a look. Yeah, Pam Energia is another short. See, look, we're finding all of these like um yeah, downside breakout, upside breakout trending down, downside breakout trending up. Like Pam looks really good. If the technicals look good on all of these, we're basically just going to like add them. The only question is um, if we add them to the investing letter as well. Oh, and Steven, like while I'm doing the model portfolio, like if you could do your check that you did last week. Oh, look, ESGR, we found it again. Um, oh wait, well that's interesting. We're gonna have to look at ESG, like, because it's also got a 91 profitability. So like, yeah, we'll look at the technicals, but that's like interesting. That definitely means we will not put it in the investing letter, just so you guys know. But we'll look at some things. TGI, nothing there too. I think we've went through everything pretty well. Stephen, do you have any questions?
No, I think that's going to
There's a
make a good
learn
video.
section, obviously, which like gives you, I would say, some different longer answers than like what's in like our now like bottom sheets. Where again, to remind anyone, you kind of go in here, you click on one and you swipe up. But yeah, anything I should do in the app or should I end it?
Uh, no, I think we can end it and just say like, thanks for watching the Prospero.ai app tour, because that's how I'll end it in the video tomorrow.
Thanks for watching the Prospero.ai tour. Yeah, I think you're gonna have to cut some stuff. But yeah, stopping it.
Perfect.
Now model portfolio. And yeah, definitely let me know. Um, definitely let me know with um like as I start to go through the model portfolio, uh what like if sorry, the ones that we have in um the ones that we have in the newsletter that we don't have in the model portfolio, because I do want to look to add those too. Um, we have said that we want parity there. And then one other thing before I share, I'm actually looking at doing some things, a few things differently based on feedback I've gotten. So yeah, if you have anything, one of the things I'm going to do, and I think it's a good idea, I'm actually going to shift it. So the newest positions are now first and the old positions are last. That was a really good idea. And then the first thing is the other thing is I'm going to make a new tab that um, all right, done. I'm going to make a new tab that basically says how many, because this was another question from yesterday that I started to touch on. Another tab that basically said um, how many um, positions do I hold? Because I was basically like, well, beyond Meta being like a stock that I talk about on top of our screeners all the time, you can actually look in the model portfolio and see that I hold 3 positions. So I'm actually going to start showing how many open positions um, I have. So you can just basically be like, these are my largest holdings in the model portfolio, things that I'm double and tripling up on, because that gives you an idea of my conviction. Great. So I think that is, unless you have anything else, Stephen, I'm probably going to start. Um,
Think I'm good. I'm just going to start looking at those investing letter picks and model portfolio, and I'll just
yeah, I
start
have a
doing that.
feeling I have like some shorts that don't have parity, and I really missed out there, but you know that happens sometimes. Oh, and what's going on? What's going on with QQQ and SPY net option sentiment?
Okay, so QQQ is at 46 right now. So it's staying high, and SPY is at 46 as well.
Oh, that's heading down. Can you tell me like what they opened at and then closed at last week?
Yeah. So SPY closed last week at 50 and opened today at 44. And now it's at 46. So it's up slightly from the morning. QQQ closed at 48, opened at 39, and is at 46.
Closed at sorry, one more time on QQQ.
It closed last week at 48 and opened up at 39 and is now at
Okay, so
46.
we're seeing a little bit of bounce. All right, great. That's great. We're now doing This was one of our marathon ones. I hope we can get it to under 2 hours. That was actually, I don't want to do this. I like to get the fresh numbers. We've got some fresher numbers. When it comes in that quick, I always do something like that. All right, let's see. Oh, and we got to check out our, well, one thing at a time. I was like, we got to check on our new things. Okay. All right. Anything? Oh God, Tidewater. Um, yeah, I could have sworn Tidewater. We've kind of held. It's got some pretty choppy. That one TDW has some pretty choppy net option sentiment. But let's see. Yeah, I mean it's just a tough day. Yeah, on the 4 hour, it's looking pretty good. How about on the daily? On the daily, it's not looking great. All right, I'm gonna keep my eye on Tidewater. I might close out both my energy positions. Actually, I might end up doing a lot um, on this, um, but we will see about that. All right, so nothing, not doing with anything with Tidewater yet. But let's look at ETN. I believe we have two positions in ETN. Um, let's see. Let's see. Oh, ETN's doing. ETN is not the problem. Let's see. Let's look at TT. Yeah, that's a little lower than it's been. Train. Oh, not a good. Let's see. I think it's time to get. It's time to get out of Train Technologies. Um, sorry, Train. You had a nice run. ET. It's not good. Yeah, I think we're gonna get out of it. Yeah, we're gonna definitely get out of ET. I think energy is just like dipping generally, but we will verify that. Can you look up what like the sector spider is for energy? Just do like sector spider energy. I want to take a look at the technicals on that. Well, we did drop square this morning. That's good. Our ever volded VMC. I just we like VMC. No, it's just not a good. It's not a good time for these longs.
So you
I
want the
want to reduce.
spider ticker for energy?
Yes, I think you have to
X
do the sector spider. What?
XLE.
Yeah, that's a pretty big. That's what I suspected. Yeah, we're. We'll see. Well, let me check. Let me check on my pair trade. I want to see like I have you. Let's see how that's doing. Yeah, it's not as pronounced as the sector spider actually. Oh, but it's definitely going down. All right, I'm not going to worry too much about that yet. Um, we got pH. Let's see. We saw that concerning trend in an option sentiment. So let's see what's going on here. 1 hour up. It's got a positive trend there. I don't need to. I don't want to get too cute with that. All right, let's look at APO. Uh, well, I don't like that trend, but not it's not enough. I do think with some of that recovery, I mean, SPY net option sentiment is definitely like concerning me a little. Um, but yeah, nothing here. I'm all that concerned about. Um, we will just check this. Yeah, I definitely think. Oh yeah, we're getting that was a green. Yeah, we're getting the hell out of UNH for sure. All right. Any new? Yeah. This.
I have the findings of the investing versus model portfolio whenever you want them.
Give them to me after this. I want to do this portfolio review. And then that'll be what I do next. Also, I just want to, all right, we have 47 of those. And I just want to do a quick count on these other, how many longs? 67. Okay, yeah. So I definitely want to slant it more the other way. I'm definitely going to look to add shorts is the other way of saying that. So I might be very hesitant to close any of this stuff, but let's check flow. I think that's fine. Check the 30. No, that's fine on the 30. $15. No, I don't think that's enough. Wow, did we really open up LNC again? We just can't. We're a glutton for punishment on this LNC. Oh, look, that's nice. Maybe we got it this time. Let's check on lazy. Lazy always runs a little high on net option sentiment though. 1 hour, 4 hour, 30. Yeah, I think fine there. We're definitely watching this. Well, was down a lot more today. Yeah, we're definitely seeing CLNE. Let's check on the 30. Oh yeah, that's great. I might even take another one of those. And we'll watch it. That stock is really leg VNet. Oh, Casa. That's running a little high for Casa. I think we might want to get out of Casa. It's been like, oh no, back down. Wow. It was up 9% at one point today. But I do kind of just want to get, well, I'm going to see because I don't want to like, it can move really fast and I don't want to exit by the time. I'm going to follow up on it. All right. Done with that. So we exited those. I don't think we're exiting any shorts. Hold on 1 second.
We're in the infinity screen.
Great. All right, so we're back here. Now we want to build our little, I wanted to build the filter before. Now we want to build our little, which one? I made so many of these. I forgot to put, I've been doing this like, we've been doing this and didn't, ugh, I hate it's taller. Okay, good. I also hate making a wire, but you can't win them all. Maybe. There we go. Got a little bit there. Huh. So we're gonna do this. Let's just get it all ready to roll. Oh wait, I forgot. I don't think we need to add many long, so this is good. We're definitely looking to add shorts. 15. Okay. Let's see. This is the right thing we want. Oh yeah, you were gonna tell me what we had in one and not the other. Oh, and I was gonna look at. Oh, I forgot. I was gonna look at ANET. Waiting for you're adding this wrong. Can you tell me the other ones that I like noted in the chat?
Yes. ANET, BX, ESGR.
I think there was one more short, right?
Yeah, PAM.
This looks great. But yeah, this is about to like. Can you tell me what ESCR does? Okay, I'm ready for it.
Looking
While you're
for it.
looking that up, yeah, no, I'm ready for the stocks that are in one and not the other.
Okay, so the only stock that we didn't have an overlap was RHI, which was a short. We had some that had two and one that had three open positions. I don't know if you want to know which ones those are.
No, no, no. I just like I like basically what I'm saying is like I want parity on it, right?
Hmm.
So like which means like I think it's annoying if I like have it in one and not the other. Um okay, great. Now let's get the most current numbers here. We got a nice 1245, hot off the presses. Um,
That ESGR is an insurance company.
ooh, I want. I think I might add that to the investing letter. Um, um, yeah, I might actually add that to the investing letter right now. But I kind of want to add a short too, if I'm adding along. But I think which short did I really like? I think I liked. Oh, ESGR is a short and ANET long. Yeah, I'm just gonna do that right now. Sorry, guys. Oh, and then did a new one come through here? I think it did. Yeah. Okay. As promised, all of this, all of this hot off the presses information for our investing letter. Um, we'll see how that ESGR short develops because it's very interesting. Um, sorry, slight interlude there. Now we're going into the new signals. Oh man, this is like these. I actually like these marathons. Um, live streams. It's like one of those things where like it like ensures that I get like tons of work done to start my week. Like the live stream and then I think I'm gonna do a little like hack here. Actually, no. Oh, nice. I actually guessed that right. That was awesome. What is going on here, though? It doesn't like about that. I don't like that it doesn't like it. Okay, you're just gonna have to get over yourself. All right, now we do a full profitability. For those that work in Excel, this is like a or anything. This is a very big no that I'm doing in my like. I'm actually like a very. I pride myself on being a very good checker of information for accuracy. But this is like the biggest no in that. Like not putting these headers like of exactly what is what. I'm asking to make a mistake here, but not really. I've done this for a long time now. I'm very good at it, but still. Um, no, I actually am gonna do. Let's check out rope. Um, can you see what our open MPWR positions are, if anything? All right. Oh wait, oh God, I've done something. Oh, I don't know how I started that, but I do kind of like it. Never mind. All right. Okay, Roper's a slam dunk. Um,
We have one open long and MPWR
and what?
for MPWR.
Okay, I think that's enough, especially with this. Someone just posted the values. All right, whatever. Oh God. What is going on? This can't be. Oh, that was like I thought PDD was at the bottom. I was like, I didn't think things got that bad. I think we have positions in all of these already. Do we have an open position in Macy's still? Steven?
Yeah, I'm looking through right now. A ton pops up because Macy's is just M, right?
Yeah. Oh,
Would that be a short? I didn't see it as a long.
yeah. It would be
Yeah,
a
we
short.
do. We do have a short open.
Okay, have it AMN.
AMN as short? No.
Oh man, I wish I had opened this up this morning. What a mistake, George. Does it have more to go down? Not enough to double it. I do have one open. Don't be so greedy. What's going on with Xerox? I do maybe want no same thing. Well, yeah, I'm trying to add more exposure. That's what I'm like really going back and forth with myself on. Yeah, I'm gonna want to get out. Okay. Um, time to start making decisions. I think I'm gonna double up on this. I do want to check out Macy's. I might double up on Macy's. Um, definitely doubling up on Macy's. Um, can you give me an update on QQQ net option sentiment?
Yes, sir. QQQ is at 43 right now. So it dropped a little bit. It was at 46 before when we first started.
Do we have an open position in I or VYGR? Those should be pretty close to the top. You can probably just scan those.
We do VIGR. I do not see.
You're getting good at this, Steven. A lot faster.
Actually, VYGR we do as well.
I
So
don't
both,
think I want
yes.
to double up on that. So nor do I want to double up on nav, and then I'm just going to start taking this stuff. Um, I think we got out of DRH. Nope, don't want that. All right, let's see where we are. I want all of these. But we're not going to add med. I believe we have an open SKLZ, right? That should be pretty new.
We do
If I look at-
SKLZ.
I actually might close. I might want to close that SKLZ. Can you tell me about the trend on SKLZ? Why is that? I don't see it.
SKLZ.
I
Net
don't
option
see it.
sentiment.
Yeah, I actually don't see it in. I think it's closed, right? I don't see SKLZ.
It's open in a short. I see it right now. It's the fifth row for me.
That's odd. Odd.
Net option sentiment was at 64 to open, and it's all the way down to 44 right now. It's hitting a new low.
All right, we're gonna hold it. We're not gonna get too cute with net option sentiment. Okay. Now we gotta find this thing again. How many people stuck around to the end here, Steven?
It's been fluctuating, but it actually popped up to 9 right now.
Oh, nice. You know what I'm gonna do? I've had enough of this. Let's see how this is gonna look. Oh, there we go. I want one more. 16. Because we are going to add potentially all of these as HST. Right. I might want more. No, I don't want that. So what do we have now? 17. And I actually want to look because I know we have an open AAL. So I want to see what's going on here. Oh, wow. I think I would like 2 open AALs now. 30 is going a little bit. Let's see the 15. Yeah. Yeah, I think I'm going to double. I've been doubling up. So we basically need to get rid of one. I think we have an open ARW, right? I think we do. I think I saw that right at the top. Can you tell me what's going on with ARW net option sentiment? Because actually, we might want to get out of that. That looks bad.
It's currently at 17. It opened at 55. It's like very volatile, but it's currently at 17, which is near the lows.
Can you tell me what they do? I'm gonna remove them. I'm not gonna tackle that. I want to come in for a landing here. Our loyal.
Yeah,
I
we
do
got
have
5
one
right
more.
now.
I mean, we're really pushing this.
This is 2 hours in 40
Oh, I think
seconds.
one other thing I was going to look at is what is this? I want to do this less than. Yeah, there we go. I think we did 16, right? Oh no, we're gonna do. All right, marathon. Here we go. Um, I mean, we can never stop. We're gonna actually have to keep going here. Why not? I find it productive. I want to do more time on this portfolio. So, well, we know we're adding Macy's, AMN. I'm just gonna actually start filtering out what I actually like and don't like. I definitely like that. All right, AMN. It's getting added. So, like, if in case I forget, Steven, basically anything that is below here, like AAL is gonna get shorted. All of them, I'm just gonna highlight when I put them in. X-ray. Yeah, that's definitely a go. Oh man, we missed 1 o'clock. Well, here we go. We can get rid of this. Yeah, I really just want to go to. I might just do something crazy. I might just like put in only what I'm keeping. Never done anything this crazy, Steven. All right, that's being kept. It's a tough. Well, one of the things I did want to look at is SPY and QQQ. There's a positive trend on QQQ, negative. Yeah, I think I'm right to be cautious. 4 hour SPY. Yeah, we're moving back in a negative direction. Yeah, like I do want to be cautious. I don't feel bad about what's going on here at all. And I'd like it if you'd stop trying to make me feel guilty about it. All right,
Sorry for
VLY,
pressuring you.
adding HST. No, you're just the mirror here, Steven. Okay. HST we're not adding. Yes. No, that's the wrong yes. Oh yeah, look at that. CBSH. I don't just want to load up on this stuff. I think what I really want to do is just get to 10 that I like. I feel good about that number. Can you tell me what's going on? Um, can you tell me what is going on the actually we're all gonna take a look. Why not? We all want to take a look at the sectors. Instead of asking you, I kind of want to see what's going on. And this is like since this has been a few days, but yeah, real estate's heading positive. That's what I was saying. Utilities, materials.
Looks like we lost George here. I'll give him a minute to see if he's joining back in. I don't know what happened with the Wi-Fi situation. If you are still in the stream, thank you so much for sticking around the whole time. Comment right now because I want to remember your names for to know that you're the dedicated Prospero AI live stream viewers. We're over 2 hours at this point, and I think we're making the final touches on the model portfolio update, and we made a change in the investing letter. But I'll text George and see if he's hopping back in here to the live stream. I see you, Gabe. Thanks for sticking around. All right, let's see what happened to George. I haven't gotten a text back from George. I'm not sure if something came up, but if he doesn't answer me in like a minute or two, I think I'll probably end the stream. Hope you guys liked our topics today and liked the model portfolio update. I know George likes doing that. Let me know if the people that are still here, what do you like better in the live stream? The topics that we cover, which is like the first majority of it, or the model portfolio update, which do you come here to see more, which you look forward to more? Maybe we'll do more of one or the other. All right. Well, no comments there. Let me know if you're watching this later, though, if you the answer to that question. I got no answer from George, so I think I'm going to wrap it up for today. We are also going to be back live Thursday, 3 p.m. Since it's a short week, we got pushed days Tuesday, Thursday this week. I believe next week we'll be back to our normal days, Monday and Wednesday. But so the next time we'll be live Thursday, 3 p.m. See everybody there. Keep watching for our shorts and clips throughout our socials. Big things to come for Prospero. Thanks for watching, everyone. See you Thursday.